Welcome to Cost Saver Conversations. I'm Angela, and I ask the practical questions so you can quickly understand what matters. Today, I'm joined by Assad.
Hi, Angela. We are unpacking Avoid Costly Probate Mistakes, a UK checklist to know when you really need probate today, and tying it back to the wider cost saver ecosystem, including tools like UK Probate Need Checker, so you can turn insights into action quickly.
Just a heads up before we dive in, we are your synthetic hosts. We are great with numbers, but as AI, we can sometimes be confidently wrong. Think of us as the digital versions of your most knowledgeable, slightly caffeinated friends.
Exactly. Treat this chat as a smart estimate only, not as professional financial guidance. Always check important details with official sources or a qualified expert before making any big decisions.
So, Assad, probate. I feel like every time someone mentions it, their eyes glaze over. It sounds like this huge, intimidating legal thing. Is it actually as bad as everyone thinks?
Honestly, no. And that's the thing that frustrates me, actually, because people just assume it's like automatic. Someone dies, you get probate. End of. And it's not how it works.
Really? Because I think that is what most people think.
Yeah, and look, I get why, but a lot of estates, a surprising number actually, are settled without ever going near the probate registry. And what happens instead is grieving families end up paying solicitors thousands of pounds, when honestly, a couple of phone calls would have sorted it.
Wait, a couple of phone calls? That's it?
In some cases, yeah. I mean, understanding the rules can save you, we're talking 2,000 to 5,000 pounds in unnecessary professional fees on a typical estate. That's real money.
That's a lot of money. Okay, so let's back up. For anyone who's, completely new to this, what actually is probate? Like, what does it do?
Right. So probate is basically the legal authority that an executor needs to deal with someone's estate after they die. In England and Wales, it's called a grant of probate when there's a will and letters of administration when there isn't one. Scotland has its own thing called confirmation, Northern Ireland slightly different again, but the core idea is the same everywhere.
Okay.
And the grant itself it's a piece of paper. That's it. But what it gives you is the legal right to access bank accounts, sell property, transfer investments that were held solely in the deceased's name. Without it, banks and the land registry can just refuse. Doesn't matter how clear the will is.
Oh, so even if the will says everything goes to my daughter, the bank can still say no?
Yep, they need that legal authority. And this is where people get confused, because a will and probate are not the same thing. A will tells you who inherits. Probate gives the executor the power to actually hand things over. Does that make sense?
Yeah, that's actually really clear. So when do you definitely need it? Like, what are the red flags?
The biggest one, and this catches most people, is property. If the deceased owned a property in their sole name, you need probate, full stop. The land registry will not move title without a grant.
Right?
And then there's this is where it gets interesting. If they owned a property as tenants in common with someone else, as opposed to joint tenants, you'll almost certainly need probate for that too.
Okay, I have to stop you there because that tenants in common versus joint tenants thing always trips people up. Can you just...
Yeah. So joint tenants means the survivor automatically inherits the whole property, right of survivorship. Very common with married couples. No probate needed for that asset. But tenants in common, the deceased share passes through the will, and you're going to need probate.
And people mix those up?
All the time. It's probably the single most expensive misunderstanding in UK estate work. Sometimes couples sever their joint tenancy years earlier as part of tax planning and then just forget. So you really shouldn't guess. Check the land registry title. It costs £3 online, takes about 10 minutes. If you see a Form A restriction on the proprietorship register, it's tenants in common.
£3? That's nothing.
Exactly. And getting it wrong has cost families months of delay and thousands in legal fees when an estate has to be reopened. So just check. Always check.
What else triggers the need for probate?
If they held more than around 5,000 to 50,000 pounds in a single bank or building society account, and I know that's a huge range, but the threshold depends on the institution. We'll come back to that. Also shares, bonds, investment portfolios in their sole name, NS&I holdings above £5,000, significant debts owed to them like a director's loan, that sort of thing.
Okay, so now give me the good news. When do you not need it?
All right, so the good news. If all assets were jointly owned with a surviving spouse as joint tenants, you're usually fine. If the total estate is small, typically under $5,000 in cash. If pensions or life insurance were written in trust with named beneficiaries, those pass outside the estate entirely. Or if the deceased just had, a state pension, a current account with a small balance, and personal belongings.
So what about that bank threshold thing you mentioned? Because that range, 5,000 to 50,000, is kind of a lot.
It really is, and this is the bit that trips people up. Each bank sets its own limit for releasing funds without seeing a grant. Nationwide will release up to 50,000 in some cases. Barclays sits around 50,000 too. Santander is closer to 50,000, but they ask for an indemnity. And then smaller building societies want probate from just $15,000 upwards.
Wait, so one bank might say fine, another might say no for the exact same amount?
Exactly, which is why the practical move is to ring every institution where the deceased held money. Tell them what's happened, ask two questions. What's the balance, and what's your threshold for releasing without probate? And, this is important, get that answer in writing. Email, letter, whatever.
Why in writing specifically?
Because frontline staff sometimes quote outdated figures, and if there's a dispute later, you want a paper trail. I've seen situations where someone was told one thing on the phone, then the bank changed its tune. So, yeah, get it in writing.
Oh, that's actually really good advice. Okay, I want to talk about a real example because I think that makes it click for people. There was Margaret from Leeds.
Yeah, so Margaret, her husband died early 2025. He left a jointly owned home held as joint tenants, a current account with £3,200, a savings account with £18,000 at Nationwide, and a small NS&I holding of £4,500. Her solicitor initially quoted £2,800 plus VAT for full probate.
Oh no, right?
Right? But after running through the checklist herself, she discovered the house passed automatically by survivorship. Nationwide's threshold covered the savings. NS&I's 5,000 limit covered the bonds. Total probate cost? Zero. Total time? About 3 weeks of phone calls and forms.
So she saved nearly $3,000 just by checking?
More than that when you add the VAT. And that's the kind of outcome the checklist exists to produce.
Wow, okay. So what happens when people get it wrong? Like, what are the actual costs?
Both directions hurt. If you apply for probate when you didn't need to, you've wasted the application fee, which is £300 for estates over £5,000 in England and Wales now. It went up from £273 in May 2024, plus any solicitor time you've paid for.
And the other direction?
Worse, if you fail to apply when you should have, assets freeze, sometimes for months. Interest accrues on debts, council tax keeps arriving on the property, and after the initial 6-month exemption, you could be paying full or even double council tax on an empty property.
I hadn't even thought about council tax.
Yeah, it's a real drain. And then the big one, inheritance tax. It's due 6 months after the end of the month of death. Interest accrues from that date, currently at 7.75%. And here's the thing, delaying probate doesn't pause that clock. It just means you pay HMRC more.
7.75%. I was going to say, actually, that's higher than a lot of mortgage rates right now.
Yeah, it is. So if you got, say, £80,000 sitting frozen for 6 months at 4% interest, that's roughly £1,600 in lost growth, plus the IHT interest on top. It compounds fast.
Okay, so let's go through the checklist properly, step by step. What's first?
Step 1, list every asset and how it was owned. Bank accounts with balances, property with title type, investments, ISAs, premium bonds, shares, pensions, though note whether those pass through the estate or via nomination. Life insurance, vehicles, valuables, business interests, outstanding debts owed to the deceased. Get the total gross estate value, but also the value of solely owned assets. That second number is what really drives the probate decision.
Right, because the jointly owned stuff kind of takes care of itself.
Exactly. Step 2. Check property ownership at the land registry. £3. Look for tenants in common or any restriction on the proprietorship register. If it's clean and held jointly, you just send a death certificate to update the title. No probate needed for that asset.
Step 3.
Contact every financial institution. Get their threshold in writing. Keep a spreadsheet. Institution name, account number, balance at date of death, their probate threshold, and then a yes or no column for whether probate is required. If every account is below threshold and there's no qualifying property, you're likely in the no probate camp.
I love a good spreadsheet.
It helps, honestly. Step 4. Check the inheritance tax position. Even if no tax is due, you might still need to file a return. Quick rundown. Nil rate band is $325,000 per person. Residence nil rate band adds up to $175,000 when passing a main home to direct descendants. Spousal exemption is unlimited between spouses, and unused allowances transfer to the surviving spouse. So a widow whose late husband used none of his allowance could have an effective threshold of up to £1,000,000.
$1 million? That's actually quite generous, isn't it?
It can be, yeah, when it all stacks up. And then step 5, decide and document your reasoning. Write it down. Keep it with the estate paperwork alongside all those bank confirmations and the land registry title. If anyone challenges your decision later, that filed is your defense.
I hadn't thought about it like that. Keeping it as a defense. That's smart. Okay, so what are the big mistakes? The ones that actually cost people serious money?
Oh, where to start? Number 1, and this drives me mad, hiring a solicitor before checking if probate is even needed. High street firms will happily take on a full probate instruction without challenging whether you actually need a grant. Fees get racked up before anyone asks the question.
So do the checklist first.
Always. Number 2, we've covered, mixing up joint tenants and tenants in common. Number 3, and this one's a bit niche, but it matters, if the deceased was a landlord, you inherit not just the property, but all the regulatory baggage. Energy efficiency rules, deposit schemes, gas safety certificates.
Oh, I bet people don't think about that at all.
They don't. Number 4, distributing too early. Even after probate is granted, executors should wait at least 6 months. That's the window where creditors and disinherited family members can bring claims under the Inheritance Act 1975. If you pay out too soon, you can be personally liable.
Personally liable? As in, from your own pocket?
From your own pocket, yeah.
That's terrifying.
It is. And number 5, the digital estate. Cloud storage, crypto wallets, online businesses, loyalty points, PayPal balances. Some of these have real value. A domain name that a small business depends on, for instance. People just forget about it.
So much to think about. What about trickier situations? Like, what if someone has assets abroad?
Good question. A holiday flat in Spain or shares in a U.S.-listed company, you usually need a separate probate process in that jurisdiction. UK probate alone won't cut it. And then business owners, sole traders, partners, company directors, they all create complications around continuity of trading, employment law, shareholder agreements. That stuff needs attention fast.
And if there's no will at all, then you're into intestacy. The rules decide who inherits, and you need letters of administration instead of probate. The rules are rigid and can produce results the family didn't expect. Especially, and this is the one that catches people, unmarried partners get nothing automatically under intestacy.
Nothing.
Nothing. Doesn't matter if you've been together 30 years. If there's no will and you're not married or in a civil partnership, the intestacy rules don't recognize you. Which is, yeah.
That's really harsh.
Okay, last thing. People always ask, can I actually do this myself, or is it too risky without a solicitor?
You absolutely can do it yourself, as long as you document your reasoning, keep written confirmations from banks, check the land registry title. You're doing exactly what a solicitor would do, just without the fees. And if you get partway through and realize it's more complicated than you thought, that's fine. You can instruct a solicitor at any stage. And actually, a lot of firms will charge you less because you've already done the prep work.
Oh, that's actually reassuring. And timing-wise, how long does all this take?
A no probate estate can usually be wound up in 4 to 8 weeks. A standard probate application, we're talking 2026 figures, takes around 16 weeks from submission to grant, then another 2 to 6 months to distribute. So you're looking at sort of the better part of a year for a standard case. Plan around that timeline rather than fighting it.
Right. Okay, so let me try to pull this together for everyone. If the estate is straightforward, surviving spouse, jointly owned home, modest savings, you might not need probate at all. Check those band thresholds, check the land registry, and you could save yourself thousands.
Exactly.
But if there's property in the deceased's sole name or substantial savings just in their name, you almost certainly do need it. And don't sit on it, because that IHT interest at 7.75% starts ticking 6 months after death.
That's it. And the 5 things to remember. Do the checklist before you hire anyone. Check joint tenants versus tenants in common, always. Don't distribute for at least 6 months. Don't forget digital assets, and document everything as you go. Have I explained that clearly?
Crystal clear. Assad, thank you. This has been genuinely useful.
Pleasure, Angela. And look, if anyone's still unsure, just start with that checklist. It takes a week at most, and it could save you thousands. That's the whole point, really.
Quick side note, this guide connects with other cost-saver blogs, especially council tax bans and how to avoid overpaying, checklist for verifying local service providers, and MEES, Energy Performance Certificate C, and landlord mistakes.
Exactly. And reading those together helps you connect the dots across your household budget, not just this one topic in isolation.
And if you want to apply this immediately, jump into tools like UK Probate Need Checker right after this episode.
Primary sources used here include applying for probate and what to do when someone dies, so you can verify the data yourself and stay evidence-led.
That wraps this cost-saver conversation with Angela and Assad. If this helped, share it with someone who could put these ideas to work this week.
Your next step is simple. Try UK Probate Need Checker, then read council tax bans and how to avoid overpaying, and use them together to take action today.